the Nightly Business Report.
Good evening. Tonight, according to the Central Bank of Sri Lanka, remittances from overseas employees to Sri Lanka totaled $530.1 million in November of this year. Due to a large number of winter arrivals, Sri Lanka's tourism revenue jumped to $272.9 million in November of this year. The market had strong momentum on the opening trading day of the week, with the ASPI and S&P SL20 both holding on to their gains. And a free trade agreement was finalized between the EU and the Mercosur group of South America, but French and Italian resistance will make it difficult for the accord to be approved in Europe.
Good evening and thank you for joining us. I am Mekala Dandeniya. Remittances from foreign workers to Sri Lanka reached $530.1 million in November this year, according to the latest report from the Central Bank of Sri Lanka. This reflects the continued importance of remittances in supporting the country's economy.
The total remittances received from foreign workers in Sri Lanka during the 11-month period from January to November this year reached $5,961.6 million, marking a 10.4% increase compared to $5,399.8 million during the same period last year. Despite this overall growth, the remittance amount for November 2024 was lower than the $537.3 million recorded in. This makes November 2024 the only month this year where remittances have decreased compared to the previous year. The Central Bank of Sri Lanka's latest report highlights these trends, with further details available in the accompanying table. The decline of November remittances has raised concerns, especially as remittances have been a crucial source of foreign exchange for the country. However, experts remain optimistic that the overall growth in the first 11 months will continue to support Sri Lanka's economic recovery. The government is also focusing on measures to boost remittance flows in the coming months.
The national tea sales average for November 2024 fell to 1,137 rupees per kilogram, making a decrease of 34.93 rupees from October's average of 1,172.15 rupees.
Despite a slight monthly decline, Sri Lanka's national tea sales average for November 2024 showed a year-on-year improvement, rising by 20.57 rupees from 1,116.65 rupees recorded in November 2023. The average price for the month settled at 1,137.22 rupees per kilogram, down 34.93 rupees from October's 1,172.15 rupees. High-grown tea saw a month-on-month decline of 34.82 rupees, with the average price falling to 1,175.1 rupee, but prices remained higher by 88.1 rupees compared to November 2023. Medium-grown teas experienced a drop of 27.61 rupees from October, reaching 1,080.61 rupees, through YOY prices were up by 6.32 rupees. Low-grown teas, which constitute the majority of Sri Lanka's tea production, saw a month-on-month decline on 41.6 rupees to 1,158.92 rupees, but showed a slight increase of 0.79 rupees YOY. From January to November 2024, all tea-growing regions reported higher averages compared to the same period in 2023, both in rupee and dollar terms, indicating resilience in the face of ongoing market challenges.
Sri Lanka's tourism earnings surged to $272.9 million in November this year, fueled by 184,158 arrivals during the winter season.
Sri Lanka's tourism sector has been significant growth, with total arrivals for the first 11 months of 2024 reaching 1.8 million. The culminated earnings soaring for $2.8 billion, a 56% increase compared to the previous year. The country is on track to achieve $3 billion in tourism earnings for the full year and is projecting The country is on track to achieve $3 billion in tourism earnings for the full year and is projected to over $5 billion in 2025, driven by the global recognition and enhanced travel infrastructure. Despite brief travel advisories, the sector has demonstrated resilience with strong support from both international and domestic travellers. This growth reflects the country's continued appeal as a top destination as Sri Lanka benefits from improved tourism services and increased global interest. The government is also focused on expanding marketing efforts to attract more visitors in the coming years. While upgrading key tourist infrastructure with favourable market trends, Sri Lanka's tourism sector is poised for sustained growth. The rise in arrivals indicates a positive outlook for the country's economic recovery.
Ambassador of Sri Lanka and Permanent Representative to UNESCAP, Vijayanthi Edirisinghe recently met with Bangkok Governor Chadchart Sittipunt to explore areas of potential collaboration between Sri Lanka and Bangkok. The partnership aims to strengthen ties in various sectors including health, education, environment, tourism and cultural exchange. Ambassador Edirisinghe emphasized the opportunities this collaboration could bring in, enhancing relations across multiple sectors. Governor Sittipunt expressed his support for the initiative and showed particular interest in cultural exchanges, highlighting a potential showcase of Buddhist relics in Sri Lanka. This initiative, he noted, would foster mutual understanding and appreciation of Buddhist heritage. Both parties are optimistic about the positive impact of this partnership on strengthening bilateral relations. Let's take a short break now. This is the Nightly Business Report. Welcome back to the Nightly Business Report. On the first trading day of the week, the market showed positive momentum with both the S&P SL20 and ASPI maintaining their gains. For further insights, we speak with Anjali Matthews from First Capital Holdings.
Today, the Colombo Stock Exchange continued its positive momentum for the 9th consecutive day, continuing to record an all-time high level of the all-share price index, which closed at 13,719, gaining 105 points and marking a 0.77% increase from the previous day. And similarly, the S&P SL20 index also experienced gains, closing at 4,094, gaining 32 points and marking a 0.79% increase from the previous day. The key contributors towards the market's positive performance include Haley's, LOLC, HNB, Central Finance Company, and LIOC. Amidst the positive sentiment, retail and high net worth investor participation was high, while the plantation and hotel sector stocks recorded significant gains. And in contrast, the banking sector stocks experienced a decline. Market turnover remained strong, closing at Rs 4.5 billion, which marks a 9.7% increase from the monthly average, where the capital goods sector dominated overall turnover, accounting for 21.3% of turnover, which was followed by the diversified financial sector and the food, beverage and tobacco sector, which contributed to 21% and 17% of overall turnover respectively. The top gainers of the day were Nation Lanka Finance, Asset Asia Finance, Ambion Capital, and Abans Finance, while the top losers of the day were SMB Finance non-voting, UB Finance, Tess Agro non-voting, and Mahawali Reach Hotels.
On the first trading day of the week, the market displayed an upward trend with gains held by the ASPI and S&P SL20. The market is anticipated to stay stable going forward due to optimistic investor attitude. For further insights, we speak with Ranjan Ranatunga from First Capital Holdings.
The Colombo Stock Exchange began another week in green, recording a gain of 125 points to close the day at 13,738. The growth in the index was mainly driven by the improved participation from both banking and index heavyweight shares. Going forward, we expect the current positive sentiment to continue, mainly driven by participation from both high net worth and retail investors. Having hit our 2024 target of 13,500, we at First Capital believe that ASPI could hit 15,000 by next year end. Few things we are considering as driving forces for the SPI. Number one is the valuations. So looking at the valuation right now, the market is trading at about 8.2 times PE and a book value of 1 times. In the history, SPI has traded at an average of around 12 times. So considering the current valuations, the share market is at a steep discount right now. Number two, the interest rates. The interest rates are currently hovering on the single digit level territory right now. And in the foreseeable future, we expect it to remain in the single digit territory, mainly due to the improvement in key economic indicators such as inflation, reserves, and liquidity levels, which will keep interest rates in the single digit levels. So, benefited by the single digit levels, together with the lack of alternative returns on alternative investments, we believe that investors may get pushed to invest in the share market, thus improving the participation in the stock market in the near term as well. Third is the corporate profitability. So, last quarter we saw corporate profitability increase mainly due to the recovery in economy that we have seen so far, together with the reduction in finance cost. So going forward, we expect the same reasons to move the profitability as well, with profits growing in the next few quarters as well. While the reduction in interest rates is also expected to reduce finance cost, further boosting the profitability of the listed corporates as well. Thank you.
Gold prices rose today, driven by China's central bank resuming gold purchases after a 6-month hiatus. Spot gold climbed 0.5%, reaching a $2,646.69 per ounce, while US gold futures increased by 0.3%, settling at $2,668.20. This move from the world's top consumer added support to the precious metal, while investors awaited US inflation data later this week to gauge Federal Reserve's next steps. The market's focus remains on economic indicators that could influence central bank with policies, with inflation data expected to play a key role in shaping future investment decisions. Oil prices saw a slight increase in Asian trade today as traders factored in a higher risk premium due to escalating geopolitical tensions in Syria. Brent oil futures for February rose 0.3% to $71.34 a barrel, while West Texas Intermediate crude futures also gained 0.3%, reaching $67.20 a barrel, despite concerns over weakening demand, which led to losses last week. Geopolitical tensions between Israel and Lebanon have kept some risk premium in play. The ongoing situation in Syria following the overthrow of Bashar al-Assad's regime is expected to further influence market sentiment. The Sri Lankan rupee has experienced a slight depreciation against the US dollar today compared to last week. According to the Central Bank of Sri Lanka, the buying rate of the US dollar has edged higher, while the selling rate has also seen an increase. Let's now take a look at how the Sri Lankan rupee is performing against other global currencies. A short break now. This is the Nightly Business Report. Welcome back. TVS Motor Company has launched a new 2.2 kilowatt-hour battery variant of its iQube electric scooter in Sri Lanka, offering improved performance and supporting the growing demand for eco-friendly transportation in the region.
TVS Motor Company has expanded its TVS iQube electric scooter lineup with a new 2.2 kilowatt battery variant, now available in 6 colors and 3 variants. This new variant aims to make premium electric mobility more accessible and reduce the total cost of ownership for customers. The iQube features advanced technology including a smart dashboard and fast charging capabilities. Madhu Prakash Singh, Vice President EV International Business at TVS Water Company, expressed excitement about the growing popularity of the TVS iQube in Sri Lanka following its launch just a few months ago. The company is optimistic about further growth in Sri Lanka's electric vehicle market. On a global scale, the TVS iQube has reached a significant milestone of 400,000 customers. The launch of the new variant strengthens TVS Motors' commitment to sustainable transportation solutions.
The 10 billion rupees Aviana Private Chalets, a 7-star luxury boutique hotel, aims to generate $500 million in foreign exchange revenue next year, with operations set to begin soon.
Aviana Private Chalets, with an estimated investment cost of 9 to 10 billion rupees, is the final stage of construction, offering 60 unique designed star-class chalets, each promising an exclusive and enchanting experience. The first set of chalets is set to begin commercial operations in April next year, according to top officials of the company. At a media gathering in Colombo last week, Dr. Thisara Hevavasam, chairman of Aviana Ceylon, emphasized that his distinctive project would provide a significant boost to Sri Lankan tourism sector with a projected contribution of $500 million annually. The company is also planning to offer tailored private gaming experiences at its casino targeting high rollers, which could become a major revenue stream. Additionally, Aviana's strategic partnership with leading global travel companies ensure maximum exposure, positioning and project for lucrative return on investment for property owners.
Boxy.lk Private Limited has formed a strategic alliance with Socomec. This partnership aims to bring advanced sustainable energy solutions to Sri Lanka.
Boxy.lk Private Limited and Socomec recently hosted an exclusive partnership event at the Cinnamon Grand Hotel in Colombo, marking a significant milestone for Sri Lanka's electric supply industry. During the event, Boxy.lk launched its e-commerce platform, Boxy.lk, aiming to transform the local market. The event brought together industry professionals, business leaders and stakeholders who witnessed live demonstrations of Socomec's advanced product range. Socomec, a pioneer in critical power management and energy efficiency since 1922, showcased its solutions including uninterruptible power supplies, power switching and energy management systems. This partnership brings cutting-edge energy efficiency solutions to Sri Lanka, enhancing operational reliability and sustainability for local businesses. Together, Boxy.lk and Socomec aim to set new standards in the country's electrical supply sector. The collaboration underscores both companies' commitment to driving innovation and energy efficiency in Sri Lanka's growing market. With this partnership, local industries now have access to state-of-the-art power management solutions.
Michelin is selling its Sri Lanka-based Midigama tyre and casting product division plants, which produce bias tyres and tracks for construction equipment, to SIAT Group.
Michelin is selling its Sri Lanka-based Madhigama tyres and casting product division plans to the SIAT Group, which also includes the Camso brand, after a 3-year licensing period. The sale covers facilities that produce bias tyres and track for compact construction equipment. The transaction is being hailed as a success thanks to its high-performance engagement for employees and quality of the production facilities. Both Michelin and SIAT have ensured that the deal will preserve jobs and maintain business continuity for Michelin's global customers. The transaction is still subjected to regulatory approvals from the relevant authorities. Both companies are committed to working together to ensure a smooth transition for employees, customers and suppliers. This strategic move aligns with both companies' growth plans, ensuring continued success in construction equipment sector. The deal also strengthens SIAT's position in the global market for specialized tire solutions.
Lanka Hospitals has introduced an affordable heart disease treatment program for government employees, pensioners and Agrahara insurance scheme members to ease their financial burden.
Lanka Hospitals has launched a new program of offering heart surgeries with discounts up to 300,000 rupees for government employees, pensioners and members of the Agrahara insurance scheme. Additionally, Agrahara members will receive extra benefits. The initiative is designed to provide affordable and accessible heart disease treatments to those who may face financial challenges in obtaining critical care. At a media briefing, Lanka Hospital's CEO Deepti Lokuarachi, along with the other key executives, emphasized the program's aim to support public sector workers and retirees by offering high-quality healthcare at a reduced cost. The program ensures access to advanced medical technology and expert care from specialized doctors. Lanka Hospitals reassured that all services, including consultations and surgeries, will meet the highest standards of medical excellence, ensuring patients receive the best possible care. This initiative reflects the hospital's commitment to making heart disease treatments more affordable and accessible to Sri Lanka's public sector workforce and retirees.
Let's take a short commercial break. Global business updates coming on the other side. This is the Nightly Business Report. Welcome back to the Nightly Business Report. Most Asian equities declined today, with South Korean shares falling to their lowest level in over a 10-year due to escalating political unrest in the country. South Korea's KOSPI dropped more than 2%, marking its lowest point since early November last year, following a loss of more than 1% last week. Meanwhile, Japan's Nikkei 225 gained 0.3% and the Topix rose 0.4% after revised GDP data showed Japan's economy grew slightly more than expected in the third quarter. However, the growth figure was still below the rise in the previous quarter. In China, the Shanghai Composite Index increased by 0.4%, while the Shanghai Shenzhen CSI 300 Index edged up to 0.2%. The EU and South America's Mercosur bloc finalized a free trade agreement, but the deal faces a tortuous battle for approval in Europe, given French and Italian opposition.
The European Union and South America's Mercosur bloc struck an agreement for a free trade deal on Friday. But they still face a potentially difficult battle for approval in Europe, given French opposition. European Commission President Ursula von der Leyen called the long-delayed deal a political necessity at a press conference in Uruguay. The agreement faces strong opposition from both France and EU farmers. French Trade Minister Sophie Primas pledged to resist its next stages and cited concerns over environmental and agricultural effects. European farmers also fear the deal could lead to cheap imports of South American commodities, notably beef, that do not meet the EU's green and food safety standards. European green groups also broadly oppose the accord, with Friends of the Earth calling it climate wrecking. But a group of EU members, including Germany and Spain, see the deal as vital for the bloc. They argue the EU needs to diversify its trade after the near closure of the Russian market and concerns about reliance on China. They see Mercosur as a market for EU cars, machinery and chemicals, and a potentially reliable source of critical minerals. They also believe it has agricultural benefits, as the deal offers greater access and lower tariffs for EU cheese, ham and wine. German Chancellor Olaf Scholz posted on X Friday the deal would create a free market, more growth and competitiveness for more than 700 million people. The trade agreement would require approval from 15 of the 27 EU members, representing 65% of the EU population. It also needs a simple majority in the European Parliament. South American negotiators are optimistic the EU will eventually give its approval despite French opposition.
Britain approved Vodafone's $19 billion merger with Hutchison's 3UK to create the country's biggest mobile operator after their investment promises outweighed concerns about higher customer bills.
Britain approved a multi-billion-dollar mobile merger on Thursday. Vodafone and Hutchison's 3UK were given permission to create the country's biggest mobile operator. Regulators had warned the deal could push up prices, but they accepted a pledge by the two companies to invest in 5G networks and offer protections for retail and wholesale customers. Britain's Competition and Markets Authority, or CMA, said they now believe the merger is likely to boost competition in the UK mobile sector. It added Vodafone and Three must agree to implement the proposed measures. The approval follows a demand by Prime Minister Keir Starmer for regulators to put economic growth at the front of their thinking. It also marks a major shift in the CMA's belief that 4 operators were needed to ensure competition and keep consumer bills low. Vodafone and Three have committed to spend $14 billion to build a better 5G network serving 50 million customers. Regulators believe the investment should drive competition between the 3 remaining networks. They also think it could eventually deliver a better service for customers. Vodafone will own 51% of the combined company, and it will have an option to buy the remainder after 3 years subject to certain conditions. Vodafone shares were up slightly in early trading.
That is all from us on the Nightly Business Report for today. We will see you again tomorrow with the latest updates in the global business. Until then, I'm Michaela Dandenia. Thank you for watching and have a good night.